This is Peter from finmods.com. In this video, I'm showing you how to build a financial model for a mobile app business. I created this financial model based on Microsoft Excel, and you can find more information about this model on finmods.com. That's my website. You can buy it there and you can get it and you can build up a financial model within a very short time. What's the special thing about this model? It's the main feature is this one screen assumption page. So my main focus while building this model was to keep it simple, KISS. Keep it simple, stupid. I think it helps very much to reduce it on one page and to give you also feedback on the one page where you put in your assumptions. Therefore, I built this one page assumptions, this one screen assumptions page where you have all your main important assumptions together with the summary of the results from revenue to COGS, expenses, EBITDA, and some marketing data like monthly active users, monthly recurring revenue, cost per customer acquisition cost, the CAC, customer acquisition cost, and so on. So the main advantage is while you put in your assumptions, you get immediately feedback and you can decide whether this is a good assumption or not. And this helps you very much to make decisions, to build a financial model in a fast and efficient way. Okay, so this now already is the model with some inputs, but I'm going to show you how to use it with an empty model without any data. This is the cover page, mobile app financial model by Peter Graf. Yes, there's also a legal disclaimer. Please, this financial model is not financial advice. Of course, you will use this model on your own risk, and starting a business, any business, is always a risky adventure. Okay, so the next tab here, you see on the bottom, there's the tab. There are the tabs, the different tabs, and there is also a manual included where all the different assumptions are described and you get the info what they mean. Okay, so let's start with the assumptions page. As you see, this page has no data entries yet, and we start here step by step, and I'm showing you how to use this financial model. So we have two areas. The left side is for your assumptions. You have marketing assumptions, revenue assumptions in blue, expenses in orange, and finance here is the green area. On the right hand side, we have all the data resulting from your assumptions, the summary and the charts. And the summary and the charts will help you to, they give you immediately feedback and they help you to build your financial model. So let's start with marketing. The first month when your business starts, let's say we are starting in January 23. So we just put in January 23 or whenever. Let's say you start in June 24. You put in June 24, and this marks the start of your business. So organic. So we think about traffic and downloads, how to get more downloads and how to spread your app to potential customers and users. And weekly report, okay. And the organic downloads in M1. We start with the organic downloads in M1. So the question is, how many downloads do you expect in your first month? So let's say we put in a small number and we expect 300 downloads in our M1 is our first month. Then growth of organic downloads in % per month. So you can fix this with 300 downloads per month, or you can say, okay, my downloads, the organic downloads will grow because of my ranking rises and so on. So let's say we have a 3% growth of organic downloads per month. So this means it will increase by 3% from month to month for each month. So this also means it's an exponential growth, of course. So please be careful. Don't put in too huge numbers. Let's say if you put in 50%, here on the right-hand side, you already see MAU, and MAU is monthly active users. And MAU results from downloads. And you see with such a high growth rate of 50%, your MAU would increase to 40 million in year 5. It's possible, of course, if you really build a very popular app, but please be careful. Don't overestimate the potential. We stay here with a lower number of 3%. Just for an example, please be sure this is just an example. And of course, you are totally free choosing your own numbers. The next one is the user churn rate per month. When you start an app, you not only gain customers, but you also lose customers. And it will depend very much on the type of your mobile app and on the customer behavior. And for sure, you will lose customers from month to month. The only question is how many. And I would say there are mainly two possibilities. Either you have a very high loyalty and you lose just a little bit of your customers, let's say 3 or 5%. Or you have an app that will be used only for a short term, and then you put in a very high number, let's say 70% churn rate. This means you would lose 70% of all your users each month, which is which happens pretty often. A tip for putting in this churn number is just take 100 and divide it by the average months the users will stay on your app. So let's say, for an example, if your users are expected to stay 2 months on average, you take 100 divided by 2 and you get 50, so your churn rate would be 50%. Okay, then users in M1, if you already have an app up and running and you want to use this financial model for this app, and let's say you already have 10,000 users, you can put in this number 10,000. If you start from scratch, just leave it blank. The next one is max organic downloads per month. This is a cap. So as the growth of the organic downloads leads to an exponential growth, you may want to put a ceiling, a maximum ceiling, a cap for the maximum possible organic downloads per month. Just an information here, the number or also the not input number represents the cap. So this means if you put in nothing, means 0, your maximum organic downloads are 0. So if you want to leave all possibilities of the exponential growth, just put in a very high number as it is by default. And if you want to reduce, if you want to activate a cap, you can put in a maximum number, let's say of 1,000 maximum organic downloads per month. Then the organic downloads are 1,000 per month maximum. Okay, so we just leave here a higher number of, let's say, 50,000 maximum organic downloads per month. So then we come to ads. Of course, you can buy ads to promote your app. And here you can put in the assumptions for the ads. PPC is pay-per-click advertisement. and you can enter your budget per month. Let's say we start with $500 per month for our ads budget. And as you see on the right hand side, the financial model starts to calculate all your assumptions, and you get more and more feedback the more far we proceed with our inputs. CPC is the cost per click. This is how much you pay for one click on your ad. So let's assume a CPC of 25 cents per click. Then the next one is increase of budget in percent per month. So you can also, you could leave this ads budget constantly with $500 or whatever you enter. Or you say, okay, I'm planning to increase my ads budget from month to month by, let's say, 5%. So we see our ads budget is increasing, and we also need a conversion number. The conversion means the conversion from a click to a download. So the ad clicker, how many ad clickers are becoming a downloader, a user of your app. And we say we get 10% of the ad clickers to become users, and then we see already, okay, the downloads are growing. The next marketing campaign is email, which, by the way, is probably your most profitable one. So you should definitely check it out when you plan to start a mobile app business. Okay, let's start with email. Size of email list in month 1 in M1. If you already have an email list, you can put it in here. If you start from scratch, just leave it blank. Opt-in rate, user to email. So you can define which percentage of your users are opting into your email list. Let's say 20%, we expect 20% to do so. You not only win emails for your list, you also lose someone. The same as you lose customers, you also lose constantly emails from your list. And we put in an example of 5% per month, which is pretty high. But okay, let's assume 5% per month are opting out. Then you can define the amount of sent emails per month. Means how many messages are you sending to your list. And we assume that we are sending out 20 messages per month. Means one message per business day. So we enter 20 emails per month. Then conversion emails to users. This now is the question, which percentage of your email recipients are becoming a user of your app. And we assume that, let's say, 3% of our email users are becoming, of our email recipients are becoming users of our mobile app. And you probably will use an email service provider, so you will have to pay some fee, and we assume a fee of $50 per month. At least for the beginning. There are many different email providers, for example, like GetResponse or MailChimp or something like that. Copywriting cost per email. If you don't write the emails by yourself or by your staff, you probably you maybe are using the services of a copywriter, and you can enter the fee for copywriting. Let's say, for example, $70 for one professional written email message. You really should think about using professional copywriters because they are able to enhance your conversion rate massively. So the next fourth traffic source and marketing channel is influencer marketing. You know, social media is a very important part of our daily life now. And famous influencers provide paid shoutouts that you can book. And so we define an influencer campaign. We start with follower per influencer. This means how many followers does your average influencer you are planning to use have. And so we start, let's say, with 50,000 followers. Then is the question of the organic reach. How many followers will be reached by the shoutout? Probably you won't reach every follower. The social media platforms don't give this reach. In 2021, about 9% of all Instagram followers are reached with a shoutout. So we start with the assumption of 9%. Facebook is much lower, I think about 3%. LinkedIn is about 5%. So this also varies. Just Google the organic reach of your preferred social media platform to get some actual data. So we start with a 9% organic reach. Then next assumption is conversion reached follower to user. This is the percentage of the reached followers that become a user of your app. And we assume that, let's say, 2% of the reached followers are becoming users of our mobile app. In our financial model, we now define the cost per shout out. And let's say you're paying $250. I don't know exactly how much they charge. This also will vary very much depending on the influencer and your negotiation skills and so on. But let's say $250 per shout out. And how many shout outs are you planning per month? And let's say we plan 10 shout outs per month. And you can also increase the shout outs in percent of months. So you can increase your influencer marketing campaign. And we say, okay, we are willing to do 5% more shoutouts from month to month. And when we have a look on the right-hand side, we already gather some interesting information. We get the monthly active users, the MAU, which is in month 12, 7,793 grows 1 year later to 15,000, then 28, 51, and 90,000 in month 60. The total downloads, this is a cumulative numbers, is in M12, 32K, then 108, 249, 500,000, and almost 1 million in M60. And then you also see the CAC number, the customer acquisition cost for each marketing channel you're using. Of course, organic is free of charge, so organic is always zero, but you can't, organic does not depend on your marketing efforts or not on your ad spends at least. But we have the cost numbers, the CAC numbers for email, influencer, and ads based on our assumptions. And we already see that email starts with 77 cents per user in month 12, and then decreases very strong, which shows us that email is highly profitable, and I can highly recommend you to check out email to promote your mobile app business. CAC for influencer is 278 and CAC ads is 250. So we don't know yet if this is profitable or not, because we don't have LTV, which means the lifetime value of one customer, which we gather as soon as we put in our revenue assumptions. Okay, so then let's start with revenue. You have 3 different revenue sources that you can plan in this financial model for a mobile app. The revenue source number 1 is subscriptions. You can define 3 different subscription types. You can also give them your names, the names you prefer. By default, it's silver, gold, and diamond. You can put in mega, giga, and tera, for example, or whatever you want. Giga, mega, giga, and Tera, for example. Okay, and then you always have the fee per month that the customers pay. Let's say Mega is our entry subscription with $7, and the conversion from free. So this financial model assumes that you offer a free version of your mobile app and that a certain percentage of these free users are opting in to your subscription. You also can do a 100% subscription-based model. You could do this by entering as a total 100% conversions. This would assume that there are no more free users and only paid users. I show you this in an example. Let's say we have Mega, Giga, and Tera, and we start with a freemium, which means there is a free model and you're offering subscriptions. So we have Mega $7, we have Giga, let's say, with $25, and we have Tera, let's say the business, for $90. And now we enter our conversions and we say, okay, we have the freemium, we have the free as the basic model, and we offer as an add-on and our main revenue source, the subscription. So let's say 5% opting into Mega, and you see now we are starting to make revenue. Money comes in. Giga, our mid-size subscription, let's say we get 10%, and our high-priced Tera, let's say with 2%. So now we already gave revenue numbers on the right-hand side, which shows us our results, at least at the moment, based on all the assumptions we already put in. And you see, okay, there is revenue of 269K in year 1, and in year 5 to $3.9 million. We have MAU, we have also break-even revenue, but this is not very, this is not correct yet because we haven't put in any expenses yet. And then you have the MAU, MRR, based on subs, the monthly recurring revenue subs only. So this MRR subs does not include the in-app purchases and the ad impressions. This is for subs only. The cumulative downloads, CAC, and so on. Then here on this circle chart, you see the marketing, your marketing expenses for influencer, for ads, and for email. Then we have the monthly active users. You see gray is free, red is Mega, yellow is Giga, and green is Tera. So you see here on this chart very easily, most of your users are free users and part are Mega, Giga, and Tera subscribers. Then the second circle chart shows us the use of funds. 0% are COGS. COGS means the cost of goods sold. 24% are for expenses. Expenses yet are only our marketing expenses. We don't have any further operating expenses or personal expenses. And 76% are EBITDA, so super profitable business. Congratulations. This is a money printing machine at the moment, but it's not finished yet, of course. Okay, so our second potential source of income is in-app purchases. You also can define this kind of products you are planning to sell on in your mobile app. Let's say, for an example, an ebook, a tool, and a course. And we also can enter price, conversion rate, and if we want, COGS. Okay, let's say we sell an ebook for $5. The conversion rate for the ebook of all users is, let's say, 3%, and we have further revenue. Then COGS, well, with an ebook, COGS is pretty much zero. If you sell, for example, a physical product, of course you have to manufacture or to buy it. Then you could enter COGS for the physical product. Then a tool, we priced the tool with, let's say, $19. We assume a conversion rate of 2%, and we have, let's say, a COGS of 5%. And you also sell a video course for $190 with a conversion rate of 0.2% and a COGS of, let's say, 3% for server hosting or whatever. Okay, these are the in-app purchases, and then our third revenue source is ad impressions. We start with user visits per month. So now these ad impressions are the ads we sell to other advertisers. So we sell our advertising space for ads within our mobile app. We monetize our app with ads, which is quite popular. And we define this by how often the user visits the app per month. So we start with the app user behavior. User visits per month. Let's say the user is going to visit your app daily, which is great. Let's say 30 visits per month, every day. User dwell time in minutes. The question is, how long is your user staying using your app? On average, let's say the user stays 10 minutes in your app. He's reading your posts, looking your videos, whatever, and stays on average 10 minutes, which are fantastic numbers. If you really could reach 30 daily visits and 10 minutes, that's impressive. It's just an example. Probably the numbers are much lower. Okay, then how many ad impressions are you offering per minute? Means how many different ads are you showing to your app visitors per minute? And we say we show 2 different ads per minute. And finally, the ad revenue per 1K impressions. How much revenue can you make from showing the ads? The average number is about $1 to $3. So let's say we can gain $2 on ad revenue. And so here you see on the right hand side on the charts, the revenue chart. Blue is for subscriptions, yellow is for the in-app purchases, and green is for ad impressions. And there you can find how much revenue in relation to the other revenue sources you can make from each source. Okay, and we also see on the right hand side, on the chart side, the core financials. BE revenue is the break-even revenue. Yellow is the revenue you're actually planning, and green is the EBITDA, your profit, the earnings before interest, tax, depreciation, and amortization. And the final chart is customer acquisition cost, as we already mentioned. You have CAC for email, influencer, and ads. And as you see, influencer and ads are static, as we always have to pay the costs for the shoutouts and the ads again and again and again. Maybe you can improve it, but this is calculated static. But you can improve. It's highly probable that you can decrease the cost for your email marketing, because your email list is growing and growing and growing. And the great advantage of email marketing is that you can use your list as often as you want. You own the email list. You don't own the platform, let's say Facebook, or Meta, or Instagram, where you are buying ads. You have to pay every time you're using these foreign platforms to buy ads. You have to pay for every single ad. But if you're using your own email list, you don't have to pay for it. Yes, of course you have to do and be active to gain people on your to get people on your list, but you can use your list as often as you want, and that's the main advantage of email marketing. And this dramatically reduces your CAC for email, and therefore this is a huge marketing advantage that you should use anyway. Okay, so now we have marketing, we have revenue, we have fantastic EBITDA, super profitable business, year 5, over $5 million. I will start this mobile app business immediately. Okay, let's get to expenses. There is not only revenue, there's also expenses. So the first possibility, the first expenses position is server hosting. If you need it and if you want, you can define your server hosting cost. The cost per user and per month. An example, if you have to pay rent for the servers, a realistic example is about 7 cents per user per month. This is a realistic number, but if you market your mobile app through the Apple Store or through the Google Play Store, this cost for server hosting are included in the store fee. So you probably won't need this server hosting cost. But if you promote your mobile app through your own website, and you operate your mobile app on a certain server, then you will have to assume this server hosting cost. Okay, so now we get to the App Store. App Store shares in revenue. This is the question: how much revenue, how much downloads you will get from Apple, how much downloads you will get from Google in percent. The stats show us that Google is about 90%. That's my assumption, the average stats, and Apple generates about 10% of all downloads from an app if you put a mobile app on the Apple Store and the Google Store. So of course these are just average numbers, but they are realistic, real life numbers. And an information, this number here, the total must equal 100% to get a correct result. So this means if you put in, for example, 20% Apple and 100% Google, or 1000 whatever, 100, you would become 120%, and then this cell turns red and warns you, attention, it's wrong. This only can be 100% to be correct. So, okay, we change it again to 10% for Apple Store and 90% Google. And we see, okay, so it's clear. No red warning flag. Everything's fine. Then we enter the Apple Store's fee in percent of revenue. So this is the cut that the store takes from the revenue. You get a lot of service for this. They provide you with the platform to promote your app. You get organic traffic that is for free. You get the server hosting. You get the payment and so on. So this provides you value. And the standard fees at the moment are 30%. Both in Apple and in Google. Of course, this can change. So if you plan your mobile app business, you should check this out. You should check out the actual store fees. Okay, customer service. Maybe your app demands customer service. If you are selling something through your app, you will need some form of customer service. You can define this to find out how much customer service you will need, how much employees you will need, and these assumptions help you with this. So we define the tickets in percent of users. let's say 1% of users will demand some kind of customer service. Then the question is, how much time will it need to solve one CS ticket in minutes? Let's say it will take the customer service employee on average 5 minutes to solve the issue. And then the full-time work week in hours, how much is the regular full-time work week in hours in your country where you are planning to employ the customer service employees. So let's say a regular 40-hour work week. So the next expenses, one more information about customer service. This does not result automatically in customer service expenses, but it shows you in the next tab I will show you later the amount of customer service you are probably needing, and then you can plan your personnel, your staffing based on this number. So then expenses in percent of sales. So this is utilities, for heating and water and so on. Let's say we have to pay 1% of sales for utilities. Then fees and insurance. There are always fees and insurances. You don't want it, but you will have to pay for them. For example, 1%. These are just example numbers. Administration, you will have to do accounting and legal consulting and so on. I assume simply 1% for an example. Then you could also put in leasing if you lease a car or machines or computers, whatever. Debit and CC fees. You don't need these fees, at least at the moment, when you use the app stores, Apple Store and Google Store, as far as I know. If you promote and market your mobile app outside of these stores, well, then probably you will have to use some payment system and you will have to pay payment fees. These payment fees are on average between 2 and 3% in many cases, not all, but many cases. You could also assume further expenses for whatever needs you have. Then office rent per month. Let's say you rent an office for $1,500 per month. And the next one is app maintenance cost in percent of development cost per year. These are costs that are often overseen when you really develop a mobile app from scratch. And let's say this will cost you $100,000 for whatever app. Then it's not done when the app is finished. It sounds contradicting, but when you have the app developed and ready to market, you are not finished in maintaining the code, and there will always be some demand for changing the code, for updating. You will have to fix bugs, you will have to meet up new regulations, you will want to offer new features into the app, and so especially in the first year, the reference value is about 50% of the development cost will be your app maintenance cost, and from year 2 on it's about 20% per year. So let's say we assume 35% of our initial development cost as yearly app maintenance costs to keep our app up to date and to optimize it, fix bugs and so on. And finally, payroll tax. Let's assume a 12% payroll tax for the expenses for employees. This will vary widely from country to country. So this is just an example number. Investment. Okay, so now this is the part finance, the green one here in this area. And we start with our investment. And when we start a mobile app business, well, we will first of all invest into our app. We will have to develop the app. we can assume a one-time fee to develop this app. And let's say we spent $100,000 to get our great new super profitable mobile mega giga app by software engineers for 100K. We also need some office computers. You can put in further whatever you want, investment items, legal advice, and so on, whatever you think you will need to start your mobile app business. The assets you need to buy to start your business, you can enter them here, and you get a total investment number of 110K here in our example. Then you can define the useful life in years, means how many years you will be able to use the invested items to make revenue, to use them for your business. So I assume an average number of 7 years. And then as a result, you get the depreciation per year of $15,714 or euros or whatever currency you're using. So next part of finance is financing. The question is how much money are you putting in from your own money, your equity. Let's say you have $60,000 as your own money, and you are looking for a loan to finance the rest of 70K, and then you have a total capital of 130,000. This could be enough, it's not sure yet, but we will see this later in balance and cash flow. At this moment, this is a good moment to show you the difference in the two different versions, which I have not mentioned yet. Here at the cover, you see I offered this mobile app financial model in two different versions, Mega and Giga. And these are the features. The features that both versions have is the one-screen assumptions page. You have the assumptions and the main results on one screen, which we already have been working for the last minutes, quarter hour, whatever. Mega and Giga both have this one screen assumptions page. Then you get a detailed personal planning page in Mega and Giga. This is this one. We will look later again, the personal planning page. Then you have an income statement for 5 years, 60 months, which is this one. This is the summary for 5 years. And you have a detailed one for 60 months, which shows you the data for each single month of the 60 months of this financial model. Okay, so then next you have marketing key performance indicators is included in both models, which is this one. Ads, you have marketing, you have email list size, you have customer acquisition cost, users, where they come from, organic ads, email influencers, the lost users, the monthly active users, cumulative downloads, the app visits, the monthly recurring revenue for subs, for your subscriptions, and the break-even revenue. So your KPIs. And both versions have the detailed loan repayment plan, which is this one, the blue tab. We haven't yet entered our assumptions, therefore it shows us none. But as soon as we enter our data for the loan, we have also here complete data, which I'll show you a little bit later. So now, finally, the two features that are only included in the Giga version are cash flow statement and balance statement. You don't get them with Mega, you only get them with Giga. And why should you think about Giga? Well, the cash flow statement shows you if you have enough cash to pay all your expenses during the whole period of the planning. I show you this here in the 60-month cash. In the balance. And as soon as we put in all our data for finance, we will see here the cash numbers and the cash, which means the cash balance. And the cash balance always have to be positive. Because if it is negative, you're having a lack of cash, means you're broke. You don't have enough cash to pay all the bills and all the expenses, and your employees, means your capital is too low. So we come back to this a little bit later. Now we finish our assumption for finance. So let's enter our loan. Let's say we start with our loan also in January 23. The interest rate of our loan is, let's say, 7%, and the term of the loan is 10 years. Then miscellaneous, the income tax rate, let's say, is 20%, the tax you pay on your profits. Then you can also calculate the net income. Then accounts receivable in percent of revenue. Accounts receivable, payable, and deferred revenue. These three assumptions are only available for the Giga version because you only need it for the cash flow calculation. So here in Giga, this is the Giga version. Accounts receivable means how much of your revenue is owed by other parties to you. How much do you get from customers for services you already executed but which are not paid yet. These are accounts receivable, the money you are getting from customers that is not paid yet. Let's say, for example, you're getting 5% of your revenue because you get some of your customers are paying in advance. Oh, pardon me, we are receivable. Some of your you already brought all your services, but you haven't received the money from the payment processor. This would be an example for accounts receivable. Yes, okay. So then accounts payable, which is the money you owe to other suppliers. Let's say, for example, 6% from your revenue. This could widely vary. These are just example numbers. You have to think about your business yourself if this is a realistic number or not. And then deferred revenue. This is the case when you get money in advance and you have to bring the service, you have to execute the service in the future. For example, if you offer a yearly subscription and they pay you for the whole year in advance and you have to execute the, let's say, 10 months in the coming year or in the future, then you can put in here deferred revenue, let's say 7% for an example. So now we have a lot of assumptions. I can show you now the loan is calculated now. All this NUM information is now gone and we have an exact balance from your loan. You see the monthly interest rate is 0.57%, the monthly interest rate, because we entered a yearly interest rate, and the system tells us the monthly interest rate and it shows us the monthly balance, the principal you pay and the interest you pay and the total payment for each month of the 10-year term. 120 months, and on month 120 your loan is paid. Okay, and I also showed you the balance, and now the balance has a lot of numbers and the balance check is okay, which means the sum of the assets equals the sum of liabilities and equity, and then our balance is in balance. And the cash balance, here we see the cash balance for every month looks good, is positive. So as we planned, our mobile app business with 130k total capital, it seems that we have enough cash to start up this business, at least at the moment. But take care, we have not yet entered Personnel, our staffing. So we still need staff. And let's do this now. And here's the personnel tab. Pardon me, the personnel tab. And you can enter for 5 years the details for your staffing. You can change the positions, you can enter whatever, software engineer, whatever. You can change all the positions, and for each position you can enter a salary for every year. Let's say we have a GM, a general manager, that earns $50,000 per year. We also need an IT manager, also $50,000 per year. We need an assistant for $30,000 per year, and we also need customer service for $30,000 per year. So, and now you can define how many employees for each position you need. So, general manager for each month, 1. We probably will need only 1 GM. We also define an IT manager, 1 IT manager for each month. We're starting from month 1 with the IT manager, which will maybe a crucial employee. Then assistant, also 1 assistant. And of course, you can also change this to 2 assistants, or how many assistants you think you need. Yeah, but we assume 1 for the moment. And customer service. If your app needs customer service, you get a suggestion, the needed CS employees down here, needed CS employees. And based on the assumptions we did here in our assumptions page, tickets in percent of users, the time to solve it, and the full-time work week, the financial model calculates you the requirements for customer service. So we see here in this case, it's 0.01 employee. So it's almost nothing. So this customer service demand from time to time, in this case, probably will be manageable by an assistant. So you won't need an extra customer service employee. But let's assume our customer service requirement is much higher. Let's say we have 20% tickets and time to resolve is 15 minutes. And now let's have a look. Okay, now we see 0.4 employees in month 1 and 2.25 employees in month 12. So now we really have a requirement for customer service, and we start with 1 employee here in month 1 to 3, 4, and then month 5 we start with 2 employees, and in month 12 with 3 employees. So we have now customer service, and now the system is able to calculate the total employees and the cost per month, the payroll, tax, and the total personnel cost, which are considered in our income statement. So then you can copy this area and paste it here, and you can think about year 2. We can say, okay, general manager, we stay all the same, IT and assistant is fine, okay. But we need to increase our customer service employees according to the needs we see here down. 3, and then let's say 4, okay. And then we increase to 5 customer service employees. Again, we copy this area, mark this cell and enter. The employee, the staffing data. Of course, you can also consider higher salaries, increase in salaries. Let's say 10% increase now. Pardon me, 55. Then here 35,000 and also 35,000. So now we have an increase in salary in year 3. And we also need more customer service, more customer service now 6 and 7 according to our needs. Okay. Again, we copy personal planning year 3, and that's the way you do it. And we increase customer service to 8 and 9. So now customer service is becoming huge, as you see, and 10 and 11 and 12, 12, 12 and 13 and 13. So again, copy and paste, and now we are in the final year 5. And let's say 12, okay. Oh, we need much more. Okay, let's do it right. 15, 16, and 17, and 18, 18, 19, 20. That's a huge department now. 21, 22, 23. Okay, so now you get it, you see. This is our personnel planning, and we go back to our one-page assumption, one-screen assumptions page, and now we see we have EBITDA in year 1 of 63K, so we are making a loss in year 1, but in year 2 we are making a profit, at least we are planning a profit of 211K, and this increases to more than 2 million in year 5. And then you can go into the details. A very interesting detail I want to show you to analyze is your marketing. You here have the LTV and the ARPU. ARPU, I didn't mention yet, is the average revenue per user. The average revenue per user, ARPU. So for all the users, also the free ones, we have an average revenue of $6.8. And we have LTV, which is the lifetime value of one customer. So we know LTV is $9.3. And the LTV is not revenue only, but it is revenue times our profit margin, the contribution. So you can compare the LTV to CAC, and then you can say whether your marketing is profitable or not. Simply said, if CAC is lower than LTV, your marketing is profitable. And this is very helpful because then you can check out if, let's say, your influencer marketing is profitable or not. And we see here our influencer marketing cost, the customer acquisition cost through influencer marketing is $2.78. And we spent $2.7 to gain a customer that brings us $9.3. So our marketing is super profitable. It's a more than 3-to-1, almost 4-to-1. This is a super profitable marketing campaign. And if we change the influencer numbers, let's say, the organic reach is not 5%, but only is not 9%, but only 5%. And then we look at our CAC influencer numbers, and we see CAC increased to $5 is still profitable. We make $9.30 and we spend $5, which means we still make $4.30. One more change, let's say we spend $500 per shoutout, and now we are spending $10 for a customer through influencers, but we're making only $9 back. So influencer marketing in this case is a loss, is not profitable. And you also see your yearly changes, your yearly data, the yearly profit, expenses, revenue, COGS. Users, subs, downloads, and by this, when you have first set up your inputs, your assumptions, then you can start to model it, and this now it really becomes a breeze. This is wonderful because you can test various scenarios. You can think about, okay, let's say the average influencer has 100,000 followers. Then the profit margin rises, the CAC reduces, and so on. You can test different price points. Let's say we sell Mega not for $7, but for only $3. What happens? Okay, let's say if our Mega conversion rate is not 5, but 9%. So profit rises. Let's say we sell Giga fee not for 25, but for $35, and so on. Or let's say our conversion rate is not 10 but 15%. So, and then our profit in year one is positive, and this is the way you build up a resilient financial model for your mobile business. So what haven't I shown you yet? Let's have a look. We had marketing, we had personal, we had the assumption. Yes, then there is a complete charts page that you can print out, or if you look at to get more feedback and more details about your assumptions. Then we have income, cash flow and balance in this Giga version. The Mega version has the income only. Income shows you the detailed numbers for year 1 to 5 for revenue, for COGS, your contribution, your expenses in percent, the EBITDA, depreciation, interest, the taxes, your net income, and the break-even revenue when you start to make profit. You also see the shares of your total revenue. In this case, we see ad impressions add up to 12.7%. Which means with this kind of model, with ads alone, we wouldn't have a chance to make a profit. We really need the subscriptions. The subscriptions are super, super important. So you have to check out your model and the various revenue sources you can use to make money to monetize your mobile app. In Giga, you have the cash flow statement, which shows you the details for operating cash flow, free cash flow, and net cash flow from financing and your total net cash flow. And with Giga, you also get the balance sheet per year and also all the balance sheets, the balance sheet per month. And here we have an interesting example. We have a negative cash. And this is the reason why you should consider buying Giga, not only Mega, but also Giga, because now you see when your cash goes negative, which means you need additional cash, you need additional capital, either you change your financial model or you put in more cash to finance your business. So we see in month 2 we have negative cash. We are lacking of more than $7,000. How can we get this positive? Okay, let's increase our capital by, let's say, 10K. We go to our assumptions page and we increase our cash, our equity from 60K to 70K. And then we return to our cash balance and we see now month 2 is positive again, but month 3 is still negative. So what's the highest negative number is 10.7K. So let's increase our cash again by 20K. So we say from 70 to, we increase our equity from 70 to $90,000, and then we return to the balance sheet, and now we see the cash balance is positive all the time. So super positive and mega cash cow, super mobile, mega profitable business you get now. Now, okay, so you see the cash balance is positive all the time, so you don't have a liquidity problem. You always have enough cash to run your mobile app business. And finally, the last one is the charts data. This is just to provide the financial model with the data to create the charts. Okay, I think that's it. Yes, I've got one more thing. You have also included a manual here. This on the left hand side is the Word version. Maybe you get it here where maybe I can provide it also as a PDF. But anyway, you have this whole user manual built in the Excel model itself. It's on the manual tab as it says it, yes. And you have a detailed description of each assumption you can make. You can see here, for example, the sent emails per month, the number of email messages you send to your list to promote your email per month. You get the full information, the revenue is described with additional information and so on. You see there are 99 descriptions for all the terms that are used to build the model. So let's say, for example, the max organic downloads per month. In marketing, you go to manual and we marketing manual, okay, and we go here the max organic downloads per month. And there is an important information which I wanted to refer to. Attention, if you enter 0 or nothing, then the max possible organic downloads per month are 0. Thus, you need to enter a certain number. If you're not sure, you can enter a very high value to seal all exponential possibilities. That's what maybe I already told you at the beginning. The max organic downloads per month, here you can put in a cap. If you put in 0, the max possible organic downloads per month is 0. So if you want to keep all possibilities of exponential growth open, just put in a super high number of 9 million downloads per month and you have a whole exponential growth possibilities. But you can also say, okay, no, I want to put a cap of maximum organic downloads per month of, let's say, 10,000 downloads maximum. And then we have a cap of the organic downloads. The same you can do with your ads budget. You can keep it open to exponential growth, or you can say, okay, I limit my maximum ads budget to, let's say, $5,000 per month. And then this will all be recalculated and you can watch your new numbers again and analyze it and modify it and find the best scenario to build up your super profitable mobile app business. Okay, then I think I have 1 or 2 more tips for you. Okay, we had the max organic downloads. Okay, then max PPC budget. And also it's the max PPC budget is the same like the cap for the downloads. If you put in 0, then your ads budget is 0. So you need to put in some max budget. If you want everything open, put in a super high number. If you want to enter a cap, enter the limit number of, let's say, $10,000 or whatever you think. Then I think there was 2 more remarks. Expenses. Okay, this was the server hosting. If you use the Google Play Store or the Apple Store, you don't have to pay for extra server hosting costs. The shares, the App Store shares we already talked about, and the total number of the shares must be 100% because it cannot be more than 100% to be correct. And I think one more hint. Yes, the analysis tip I already told you. The CAC in comparison to LTV. When you look at CAC, the customer acquisition cost, and you compare it to LTV, and it's lower than LTV, the lifetime value, then your marketing campaign is profitable. And if it's higher, it's not profitable, it's making a loss. Well, I think that's it so far. Thank you so much for your patience. Thank you for looking and considering the mobile app financial model by Peter Graf. That's me, by the way. And well, as you already guessed, I'm not a native English speaker. I'm from Austria, not Australia. I'm from Austria. That's the country with the mountains and a lot of snow, at least in the wintertime. And yes, thank you so much for watching and looking. And if you have questions, you can send me an email. My website is finmods.com. And thank you so much. Have a great time and have a lot of fun starting and planning your cool, super profitable financial model mobile app business. See you. Bye bye. Thank you.